Good afternoon, ladies and gentlemen. FY24 has been a record year for Ashok Leyland. Whether it is revenue or EBITDA, margins or profit, we have achieved all-time high numbers in FY24. Coming in a year when we are celebrating our 75th year of existence makes this even more special. While revenues grew by 6% over last year, our EBITDA has grown by 57% to reach 4,607 crores. Our PAT for FY24 at 2,618 crores is also the ever highest. Our EBITDA margin touched 12% in FY24 from 8.1% in the previous year, reflecting our continued focus on better price realization, efficiency in sourcing and business operations, and better revenue mix. The softening of commodity prices has also helped. I would like to specifically mention that FY24 has been a year of record cost saving for us. Our material cost as a percentage of revenue is lower by 4.4% over FY23. Another factor that has supported profitability was impressive growth in our high-margin businesses covering spare parts, defense, and power solutions. FY24 performance gives us even more strength to move forward towards our midterm objective of achieving mid-teen EBITDA. Market has also shown confidence in the company's ability to grow in the future as our stock price recently touched its peak. Since April 1, 2023, this is about 50% appreciation in the company's market cap. Our net debt at end of FY24 is close to zero. This is about rupees 1,500 crore investment. This is after rupees 1,500 crore investment in Optare, Switch, and OWN during the year. I'm also happy to state that Ashok Leyland is now back to #1 position in M&HCV buses with a very impressive market share gain in FY24. While we had a few challenges initially, our market share growth of Q4 and of April reflect a positive momentum in the M&HCV truck as well. Going forward, we are confident of increasing our market share in both the truck and bus segment. Our medium-term goal of achieving 35% market share in M&HCV segment remains intact. Our focus remains on penetrating further in North and East to bridge 30% mark in our market share. We have already achieved 25% in North and are very close to 25% in the East as well. In West and Center, we want to move our market share to above 35%. It is well within our reach now that in West we are at 32% and in the Center we are close to 30%. South continues to be our stronghold with a market share in the range of 40 to 45%. We will continue to defend our leadership position over here. In the 2 to 3.5 ton SCV segment, we are now #2 with a market share of more than 20%. We have planned for 6 new product launches in the segment in FY25, which should give us a further boost to our market share. Currently, we address about half of the LCV market in India. We are looking at expanding our LCV product portfolio to cover at least 70 to 80% of the market in the next few years. LCV presents a huge potential for us to grow our CV volumes in future. Our market share in CV exports out of India has improved significantly in the last 2 years. Despite subdued market conditions in SAARC and some parts of Africa, Ashok Leyland registered growth in its export volume. This reflects that our strategy of local market presence, focused product development for our IO markets, and our strong distribution relationship in key markets is working well for us. As some of these markets start turning around, we see good volume expansion in our IO business. Our focus on profitability remains. We are clear that we are not going to discount our products to win market share. We are confident that our market share wins will come on the back of our product superiority and our expanding reach. Our product portfolio is very robust and our future pipeline is strong. Ashok Leyland products are known for their reliability, fuel economy, and application suitability. Actions are in place to further widen the differentiation on these aspects. We are proud of delivering our first ever battery electric bus ICV in the last quarter. Our 55-ton electric tractor trailer is also ready, and first units shall be delivered within the next few months. We already have customer pilots going on for our H2 trucks. We are ready to deliver NTPC, our first set of fuel cell buses. Our first LNG trucks were delivered earlier to NGL. We are proud that we have now a complete portfolio of alternate fuel vehicles in the market. Switch and OHM are progressing well. We have just started delivering our first eLCVs in the market. In the next few months, we shall launch our second offering in the eLCV space. Both these vehicles would be segment first and have the potential to transform the last mile mobility in the country. We are preparing to make supplies of 950 electric buses in Delhi and 320 buses in Bangalore. The development of our E1 electric bus for Europe and Middle East is in advanced stages. OHM, our EMAS subsidiary, has now been fully activated. It is now managing electric bus operations in Bangalore, Ahmedabad, Bihar, and Chandigarh. Ashok Leyland balance sheet is strong enough to support funds requirement of both Switch and OHM. At the beginning of the year, there was widespread anxiety that CV industry in Q1 and Q2 might degrow because of elections and other factors. April numbers have proven this wrong. In April, M&HCV industry grew by 10%. Our addressable LCV industry also showed positive growth. The pulse on the ground is very strong. Most market macroeconomic parameters are favorable. There is a prediction of a good monsoon. A stable government post the election will see a flurry of robust economic measures. The country is poised to grow at a faster pace in the foreseeable future. All this augurs well for the future of the CV industry. We wish to remain optimistic for CV industry for both H1 and FY'25. I would now like to hand it over to Gopal for the presentation on our Q4 and FY'24 results. Just before I do that, I would also like to say that in the just concluded board meeting, the board has appointed Balaji as the CFO of the company, who has been with Ashok Leyland for the last 30 years. Gopal continues to be a director on the board and will continue with specific assignments, specifically looking at M&A and many of the subsidiary growth opportunities. So with the strength of both of our finance colleagues over here, I'm sure we will be pushing ahead much faster. Thank you.
Thank you, Dheeraj, for the presentation. I'll run through this very quickly in the interest of time, because I'm sure all of you have questions on the operating performance. So, good afternoon once again, and thank you very, very much for coming over here for an interest in Leyland. I see a lot of familiar faces. You can't hear me? Okay, I'll raise my voice a little bit. Is this better? Good afternoon, and thank you very much for coming over here, spending your valuable time. Thank you for the interest in Leyland. Very quickly, our vision is to be a top 10 global CV player. I think we've seen this earlier, so we are pursuing relentlessly on this, and you will also hear more about it over the coming years as to how we want to get there. Very quickly, we've broken the presentation into three parts. One is performance, second one is the standalone, and the third one is consolidated numbers. This is 75th year, as our chairman mentioned. This is, it couldn't have been a better year for us to achieve what we did, which is, break all records, internal records that we needed to do. It is our highest ever sales revenue of 38,367 crore. We have almost near the highs of all-time CV volumes internal of one. We had a previous high of 1,97,000 in 2019. Today we are at 194, which in real terms is actually higher than what it was earlier, because the tonnage of vehicles have gone up. Highest ever EBITDA, 57%, up from last year at 4,600 crores, and 12% EBITDA margin for the full year, and a 14.1% EBITDA margin in Q4. I think much higher than what markets had expected. There has been a 50% increase in market cap, which actually results in shareholder value. And after spending nearly 1,500 crores, investing, I won't say spending, I correct myself there, 1,200 crores in Switch, which is the future for our company, 300 crores in OHM, which is again e-mobility as a service of electric vehicles. We have been able to post a near zero debt, which is we just have about 80 crores of debt in the balance sheet. All around, I would say that the performance has been extremely satisfactory for the internal teams who have stretched and strived, despite the uncertainties that we had last year to achieve these exemplary results. M&HCV sales growth volumes, as mentioned, the TIV volumes have grown by 4%. We have, Ashok Leyland volume and market share. If we were to look at it, we were at 31.1% as opposed to 31.8%. But I think if you were to cut it a little bit, while we have been a little tad low on the truck side, we have more than compensated for it in the bus volumes. Our market share in buses has gone up to nearly 39% in the current year. We are number one in the country again in buses, and we are raring to go even further with a slew of product launches, which I'm sure Managing Director Mr. Shenu or Chairman Mr. Dheeraj will talk more about. Strides similarly in light commercial vehicles or small commercial vehicles, 2 to 3.5 tons, we have actually been flattish. But remember that the industry had degrown. So in a year, actually, we have been able to keep the numbers flat, and we have increased our market share from 19.6 to 20.4. There is a lot of excitement that you will see, exciting news that will come from Ashok Leyland over the next 12 months. We have already announced that you will see a product launch happening every alternate month, which means you can expect anywhere between 5 to 6 launches in the current year, and that will actually enhance our capability, capacity, network, and market share. IO volumes, again, while the growth looks like 5%, underneath that, if you were to unwrap it, unravel it, you will see that most of the competition in India, domestic CV manufacturers, are actually posting a degrowth because of the challenging international waters. But we have had a growth here, and as we move forward, exports is going to be a very important strategic initiative for the company. So these are the slew of products that we have launched. We haven't even put in the pics of all the products, but these have been across categories in buses, trucks, ICVs, LCVs. So, this has actually helped us to gain and perform, post the excellent performance that we have done. There is more of this coming in the coming year. Please go. Yeah, you can go for the next slide. So standalone financials, our revenues for the quarter ended was 11,267 as opposed to 11,626. That it is not a degrowth in real terms. We have been in tandem with the industry. The industry had a kind of I would say that had kind of flattened out in the fourth quarter. But if you were to look at a profit before tax, we have actually jumped 25% despite a small reduction in the top line. And if you look at PAT, there has been a 20% increase. If you look at revenues for the full year, we have, as I mentioned, it's a record revenue of 38,367 as opposed to 36,144 in the previous year. Industry volumes were only up by 4%. Our revenues are up by 6%. PBT is up by 80%. It is 3,792 crores as opposed to 2,110. And PAT again is up 90%, which is 2,618 crores as opposed to 1,380 crores. What this means is, having had a marginal increase in revenues, right, despite actually being contrary to the industry trend, having gained fantastic market share in the buses to nearly 39%, we also ensured that we kind of raised our margins to price increases, material cost decreases, VAVE, and a whole slew of initiatives that kept our middle line intact. All of this resulted in this huge jump of 80% and 90% in PBT and PAT respectively. Yes, please. On consolidated numbers, this is just one more slide, and then I'll hand it over to all of you. Revenues were up 3%, our PBT was up 25%, and our PAT was up 17% at 934 crores. And on a full year basis, consolidated revenues was 45,791 crores, up by about 10%. PBT, including exceptions, was 4,106 crores, up by 81%, and our PAT was up 98% at 2,696 crores. So with this highlights of our performance, I'm now going to hand it back to our chairman and then we'll proceed forward. Thank you very much.